Bull flag, bullish continuation. So this pattern, it looks like a flag. That is why it is called a bull flag. So we have to see this after an upside move. So this is our impulsive move followed by a corrective move. So this is our flag, and then this is our pole, the impulsive move, right? So whenever we see this pattern, we are expecting another leg to the upside. Okay. So for us to confirm that this is a flag pattern, we have to wait for a breakout. And then once it breaks out, our invalidation will be below the pattern. So for targets, our first target will be this recent resistance, and then the second target will be a measured move from this point A to point B. Okay, impulsive move plotted at the end of this correction. So this is our point D, our point this is our point C, and then our point D will be our target. Okay, let's have an example. USD Swiss 4-hour time frame. So basically we are in an uptrending market. We have series of higher highs and higher lows. So we have impulsive move followed by corrective move, and then impulsive move followed by a corrective move that formed into a flag pattern. So this corrective move also ended at support level. So previous resistance breaks out, turned into support, right? So for us to confirm that this is a continuation pattern, we have to wait for a breakout and then put our invalidation below the low. And then for our target, our our first target will be the recent resistance, and then the second target is a measured move from this starting point of this impulsive move. So this is our pole, okay, point A to point B, plotted at the end of this flag pattern. So point C, then our target will be point D. All right. Another example, gold daily time frame. So price established a support level right here. Change of structure, breaking this previous lower high. Price created a higher high. So we can expect a higher low, right? So corrective move. So from higher high to higher low, price formed a flag pattern. Okay. So this also ended at a support level, right? Previous resistance breaks out, turned into support. Okay. So for us to confirm that this pattern will work, we have to wait for a breakout. And then invalidation below the low, our target is this recent resistance. So basically, if we will trade this pattern at a breakout, we will not put our target here because basically um, we are risking more in this setup. So what we're gonna do is to place our stop loss at a measured move. So from point A, so this is the start of this impulsive move, to point B, plotted at the end of correction. So from point C to point D, and then this will be our target. Bear flag, bearish continuation. So just the opposite of bull flag. So we have to see this after a downside move. So this is our impulsive move downside, followed by a corrective move. So for us to confirm that this is a continuation pattern, or if this pattern will work, we have to wait for a breakdown. All right. So after breaking down, our invalidation will be above the pattern, And our first target is at recent support. And then our second target is a measured move. USD CHF daily time frame. So after this very impulsive move to the upside, price established a resistance right here and then made a very impulsive move downside, creating a lower low. So since we have a lower low, we can somehow expect a lower high, right? So impulsive move followed by a corrective move that formed into a bearish flag. All right. So this flag pattern also ended at resistance level. So this level was tested before. Okay. So we will wait for a breakdown and then invalidation above the high, first target, recent support, and then second target is a measured move. All right. Another example, Euro NZD daily time frame. So after this upside move, basically price reversed to the downside. All right. So impulsive, corrective, then impulsive move, creating a lower low, and then entered into a corrective phase that formed this bearish flag pattern. It also ended at resistance level, so previous support turned into resistance and then tested multiple times. So again, we will wait for a breakdown, invalidation above the high, and then first target. So in this case, if we want to trade this, we will not put our target here. Instead, we will put our target at a measured move. So from point A to point B, plotted at the end of correction. So point C to point D, this will be our target. All right.